Hey, what's up, my friend? So let me ask you, right? Have you ever, seen the market explode up higher? Right, the range of the candle is nice, big and bullish, and so you buy. The next thing you know, the market paused, and then collapsed, boom, all the way down, and you got stopped out of your trade. Man, Rainer, why does this always happen to me? Why? Well, let me tell you why. It's because of probably one of these two reasons. Number one, you are chasing breakouts. Now, what do I mean by chasing breakouts? So, look at this chart over here. Okay, so to many traders, right, they will think, man, Rainer, this is bullish, man. Look at this huge green candle. Price closing near the highs. Strong bullish momentum, Rainer. What's stopping me to buy? Are you crazy? Well, there are a couple of reasons, right, why I don't want you to buy when you see such, explosive move in the market. Reason number one, when the market, makes a huge move, right, chances are it needs to pause. It needs to rest. For example, if you sprint 100 meters, for those of you who don't exercise, you probably need to rest, right? You need to pause, take a break, get some water. And it's the same for trading. After the market makes a huge move, it needs to pause. And this could be in the form of consolidation or even a pullback. And sometimes even a reversal. So in other words, by chasing breakouts, you are putting yourself at a disadvantage because this is when the market is prone to make a pullback or reversal. So that's reason number one. Reason number two is this. When you chase breakout, let's say imagine, right, you buy this breakout over here, say on the next candle open. Let me ask you, where will you put your stop loss? Well, chances are I'm guessing you put it below this lows, right? Now what's the problem with this? Because if you look left, you would realize this is actually an area of resistance, where previous resistance could become support. Right, and if you put your stop loss just below this low of this candle, then what's happening is that the price could retest previous resistance that could become support and then bounce higher. And then you get stopped out of your trade because your stop loss is too tight. Because you're putting it smack right at an obvious level. So some of you might be a little bit smarter. So okay, I know, Rainer. So let's not put at that level. How about this low over here? And that's not a bad idea. But here's the thing. If you look at this, right, if you set your stop loss below this low now, your entry point is around this 180 level. In other words, your stop loss, right, is from here all the way down to here. That's about a 600 pip plus stop loss, and that's pretty wide. And if you have a wide stop loss, right, that actually results in a poor risk to reward on your trade. And these are the two reasons why I don't want you to be chasing breakouts. Because number one, it's prone to making a pullback or reversal. And number two, if you want to set a proper stop loss, it's usually too wide. Okay, so that's the first thing, right? Don't chase breakout. So another one, let me share with you another example of chasing breakout. So look at this, right? The S&P 500. Pretty much it collapsed 30%, right? Within a span of a few weeks or maybe 1 or 2 months. Over here, look at how bearish this is. Traders are bearish. Price broke below this key area of support. Time to short this market. And if you, again, right, if you were to be chasing this market, again, it's going to be painful because the market actually reversed 180 degree, right? And now trading back near the highs. Okay? So again, same thing happened, right? Chasing breakout. Over here, look how bearish this is. People selling, right, on the breakdown of these lows. Again, market reversed up higher. And again, the two things to consider. Number one, we talk about price prone to making a pullback or reversal. Or let's say, that didn't happen. But where are you going to set a logical stop loss? Let's say the market broke down here and you want to short this market. Where do you set a logical stop loss? There's no swing highs that you can reference to. The nearest swing high is at this high over here. That's a pretty darn wide stop loss. Okay? So the first thing, again, right, bear repeating, don't chase breakout. So mistake number two is this. You buy breakout against the trend. So as you have probably heard a gazillion times, the trend is your friend, right? If the market is trending higher, look for buying opportunities. If the market is trending lower, look for selling opportunities. That's pretty much the gist of it. But again, it doesn't really sit too well with traders because they want action right now. I want to be a trader. I should be entering and exiting my trades in and out. And that's why, they lose money often, right? So look at this. Ask yourself, what is the trend of this market? Is it heading higher or lower? Clearly, you can see that the price making a series of lower highs, lower highs, lower highs. Market is in a downtrend. So in a downtrend, what do you want to do? Do you want to buy? Or do you want to sell? Buy? Buy? Are you sure? No. You want to be looking for selling opportunities. So this means even if the price were to break out of a swing high like this over here, you don't want to be buying because the trend is towards the downside. Simple. Okay. So now what if the market is in an uptrend? Do you want to be buying or selling? So this one here, some traders may look at this, right? Hey, Rainer, look at this. Head and shoulders pattern. Left shoulder, head, right shoulder. This is the neckline. Price breaks down. Market gonna collapse. Time to short this market. Remember what I just said, right? Look at the trend. Is this market heading up higher or lower? Well, this market is in an uptrend. So you're gonna look for buying opportunities. Regardless of whether the market break down, regardless of whether there's a head and shoulders pattern, trade with the trend, right? You'll find that your breakout trades would, get better over time. Okay, so this is what I mean, right? By don't trade against the trend, right? Especially, right, when the range of these breakouts is very small. Like this is like what, 20, 30 candles, right? This range is too small, right, to be of anything significant. So these are the two mistakes, right, that you want to avoid when trading breakouts, right? Number one, chasing breakouts, and number two, buying breakouts against the trend. So now at this point, right, how should we trade breakouts? And that's what I'm about to share more with you. But first, if you are enjoying this training video, smash the thumbs up button. If you don't like it, then hit the subscribe button. Sounds good? Then let's move on. How do we trade breakout? So I'd like to share with you this strategy or concept called breakout with a build up, right? It's called the BWAP strategy. So the first thing that I look for usually is the market to be in a range. I mean, market has to be in a range, right, before you can trade a breakout. And ideally, I like to have 80 candles or more. Why 80? That's your question. So let me first and foremost say that, it doesn't have to be exactly 80. If you get like 79, 78, 77, that's fine as well. But I just said it as 80 for this particular reason, is that the longer the market is in a range, the harder it breaks. Let me explain why. Let's say the market is in a range. Okay, up, down, up, down, up. And the longer that the market is in a range, the more stop orders, right, will be placed beyond the ends of the range. So for example, let's say someone is selling the highs of resistance. Let me ask you, where will they set their stop loss? Well, if you're selling near the highs of resistance, most textbooks, most courses, most gurus will tell you to set your stop loss above the highs of the range, somewhere here. And what if the price comes towards the low of the range and people buy at support? Where will they set their stop loss? Their stop loss is probably below the lows of the range. So in other words, right, as the market stays in a range, right, the longer it's in a range, the more resting stop orders will be placed above the highs and more will be placed below the lows. And the more orders that are being accumulated, what happens? Well, this creates, right, more fuel, right, for the market to break out later on. Why is that? Because if you think about this, let's say you short at resistance, right, you put in a sell order, then you need to have a stop loss. What order is a stop loss? I'm sure you can agree that order is a buy stop order, right? Because if you short a market, your stop loss will be a buy stop order. If you buy long, go long on the market, right, that stop loss order will be a sell stop order. Okay, so let's say, for example, someone sell at resistance. This over here is a buy stop order placed above the highs of the range. And as the range progressively the market stays longer in the range, more and more buy stop order will accumulate over time. So when you get more and more buy stop orders accumulate near the highs of the range, when the market breaks out, what happens? This stop loss order will be triggered, right? And it will fuel, right, buying pressure to push the price up higher. So this is why when you pay attention to the charts, right, the longer the market stays in a range, right, the subsequent breakouts are usually pretty darn strong. Okay, and this is the reason why I look for at least 80 candles or more. Next thing I look at is number 2 is the price approach the highs of resistance and forms a tight consolidation, otherwise known as a build-up. So if you recall earlier, right, when you chase breakout, there is no logical place to set your stop loss, right? In fact, if it, like for example, let's say the market goes up, goes down, goes up, breaks out, the logical place to set your stop loss is below this support. And as you've seen, right, it can be pretty wide. So what I want to see instead is for a build-up to form. This way, it gives me a logical place to set a stop loss. So a build-up can look something like this, right? Price comes up, and instead of retesting the lows of support, it consolidates over here, forming a build-up. Now, right, now I can reference this lows, this swing low over here to set my stop loss. My stop loss now will be much tighter, right, from this highs and to this lows. That's it. That's my stop loss. Where previously, if there isn't a build-up form, my stop loss will be from here all the way down to these lows. And as you know, right, the larger your stop loss, the poorer your risk to reward. This is why we look for a build up. The third thing, right? A 20 period moving average to touch the lows of the build up. So now this is where things get tricky, right? You know, when the price forms a build up, man, Rainer, how many candles do I need to wait for? 5 candles, 8 candles, 10, 20? You know, so this element of subjectivity, right, is, I get it, right? It's not easy to handle. So this is why you let the 20 MA be your guide. So you just pull out the 20 period moving average and make sure it has to touch the lows of this build up over here. Once it touches the lows of this build up, it tells you that the market is ready to make a move. Okay, so let me share with you a few examples of how this looks like. Because I know, examples will be much easier to understand the concept. First thing first, look at this. So you want to measure the range over here. From here to here, how many candles are there? So I've done the calculation. If you're using TradingView, you can just pull out this pen, this ruler tool, pull here and all the way to the left. You can see there's about 80 bars at this point in time. 80 bars over 112 days. Okay, so second thing we are looking for is a build up. This is the build up that's formed. Now you can see that this build up, right, it's on hindsight, it's easy to look, right? In fact, doing this training video, many traders are saying, yeah, Rainer, everything's on hindsight, it's easy. Yep, I guess it's easier than, trading at the rightmost end of the chart. But the key thing that I want to share with you is concepts, techniques for you to validate on your own. I'm not telling you to trade this live immediately. These are things, that research that you have to do on your own to validate whether it works or not. Right? I'm just here to guide you, not spoon feed you, okay? So again, now this build up has been formed. But when you're trading live, right, you can see that at this point, right, the price is already forming a potential build up. But how do I know, when to place that buy stop order above the highs? Right? How do I know when to do that? So remember, I say use the 20 MA to be your guide. So I just pull out the 20 MA. You can see that at this point, the lows of the build up has not touched the 20 MA over here. So again, it's still too early to place a buy stop order above this highs. Give it some time. Until the 20 MA touch the lows of the build up, only then do you set a buy stop order above the high. So at this point, you can see that yes, the price now has touched the 20 MA. Now you can place a buy stop order above this highs if the price were to break out of it. So at this point, we can see that eventually it did break out on this candle here. Okay, so where do you set your stop loss? Very simple, right? This is the lows of the build up. You can now reference from these lows, set it 1 ATR below here, below this, somewhere about here, your stop loss. Okay, so because of having a build up, right, now you can set your stop loss at this logical level, which is much tighter, instead of this lows over here, which is so much wider. So one more example, maybe 2 more examples, right? Dollar against the Chinese yuan. So same concept. Look at this. So this is something important. We can see that this one over here. Okay? Let me do a quick quiz with you, right? Why is this different, right, compared to trading breakouts against the trend, the earlier one that you've seen? Why is this allowed but the previous one not allowed? Why? I know some of you might be thinking, oh, Rainer, the market is in a downtrend, man. Why are you looking for buying opportunities? Well, the key thing here is, again, remember, we are not looking to just trade any breakouts, right? The breakout, first and foremost, must be in a range, at least 80 candles or more. Because when the market is in a range of at least 80 candles or more, orders, right, will start to build up above the highs and below the lows. And in this case, right, orders starting to build up above the highs of this resistance. Okay, so that's the first thing, right? That's why we are looking to buy breakouts, because now the market is in a sustained range for quite a long period of time. You can see that's about, I would say, from Jan, about 4 or 5 months. Next thing we're looking for, the build up. Okay, so the market has formed a build up over here. But as mentioned, right, build up in real time is not easy to spot. So this is why you use the 20 MA to be your guide. So at this point, you let the 20 MA, the price, right, or rather the 20 MA touch the lows of the build up. So over here, it has touched the lows of the build up. At this point, you are now allowed to place a buy stop order above this highs. Stop loss, right, can go 1 ATR below this lows over here. Below this lows over here. Or even here if you want to be more conservative. Okay, so this is how you actually spot the setup, right? Just one more over here before we move on. Next one, Amazon. This is stock, right? Same concept. Over here, you see that this market is in an uptrend. Even better still, right? This one is in an uptrend. Price forming this build up over here. You pull out your 20 MA, you can see that the 20 MA has actually touched the lows of the build up. In fact, even make a false break setup a couple of times, 1 time, 2 times over here. But still, the setup is still intact, right? Your trade, right, can be to place a buy stop order above this highs. So if the price breaks above this highs, you go long, stop loss 1 ATR below this swing low over here. Okay, so one bonus tip to share with you is that if you are trading in the direction of the trend, right, I will be more lenient, right, with the range of the candles, which is, you know, you saw 80 candles. I'll be fine, right, with like, if, let's say there's 40 candles or 50 candles, that's fine. Because after all, you're already trading in the direction of the trend. But if you're trading against the direction of the trend, then at least 80 candles to form. Okay, so there you have it, right, breakout with a build up. So let me share with you a few bonus tips, right, before we end. Number one, when you trade breakouts, right, especially those of you who trade stocks, right, if the price is trading at all-time high, this is a huge plus. Why? That's because when the price is trading at all-time highs, most people are in the money. They're all in profits. They're all happy. Nobody wants to sell because, you know, you're in the green. Why sell? You know, the market could go to the moon. So they hold on to their trade. So this means there's little selling pressure, right, to push the stock price lower. So when you buy breakouts with a build up and the price is at the all-time highs, this is a good sign for you, right? You want to be trading such breakouts. This usually lead to, you know, a favorable outcome. Not always, but more often than not. So you can see over here, Amazon over here at this price point, I believe at this junction, the price is at all-time highs, right, in 2017, right, around the March-April period when price break above 850, 860, right? This is a good sign, right? I know many traders, they will look at this. Oh man, right now the market is so high, it can't go up higher forever, right? It needs to, you know, pause, it needs to reverse, right? What goes up must come down. Well, when it comes to stock, right, you want to be buying strength. When something breaks out higher, breaks out to all-time high, it's a sign of strength, not weakness. Okay? The reason why it's fine to be buying breakout here is because, again, you're not chasing breakouts. There's a difference between chasing breakout and trading breakout in a responsible manner. Over here, you have a build-up that has been formed. And over here, you have a logical place to set your stop loss below these lows of the build-up. So there's a difference here, right? You're not chasing breakouts. You're actually trading breakout with a build-up. And number two, right? If the price leans against higher time frame price structure, again, that's another high probability breakout to pay attention to. So this is more of a reversal breakout. Right, let me just explain what I mean. So over here, you look at this, right? This Bitcoin over here. So you saw Amazon earlier. That is I would say a trend continuation breakout where you're trading with the overall uptrend. But if you look at this one over here, right? This is what I call a reversal breakout. And the rules, again, right, are still the same, right? You have at least 80 candles that are being formed over here. You have a build-up that's being formed. I mean, 80 candles here, a build-up that's being formed. And the 20 MA has touched the lows of the build-up. Okay? But what's key over here is that this range that's being formed, right, is actually at a key level. So over here is actually a key level. Let me explain, right? So if you look left, right, or if you zoom out, right, you can see that that key level actually coincides with this key area of support. Let me just go up one time frame higher and you'll see it better. Okay, so basically the lows over here, the lows of this range actually is this key area of support where price broke above this resistance and previous resistance then support, and then it came back here for a second time to retest support. And on top of it, right, you realize that this market is actually leading against this key area of support. Now, I don't just buy breakouts because the price leans against this area of support. Rather, I buy it because the price action, right, tells me that the market is likely to hit higher. Over here, you see again, we have a breakout with a build-up. Over here, this is the range, at least 80 candles. We have a sign of strength, price making a series of higher lows into resistance. This build-up has been formed, and when it breaks above these highs, right, that to me is a valid breakout trade to trade. But the another factor that's going for this market is again this level here, right? You have actually come into a key area of support on the higher time frame, and that again sweetens the deal, right? And that's the key thing that I'm trying to point out. Okay, if the price, right, leans against higher time frame price structure like support, right, that also, right, increase the probability of the breakout working in your favor. Okay, so those are two things to bear in mind. And so quick recap, right? Number one, don't chase breakouts because this is where the market usually is about to make a reversal or a pullback. And also there's no logical place to set your stop loss. Number two, right, don't trade small range breakouts against the trend. Okay, so what you want to do instead is to trade breakout with a build up. At least 80 candles in a range. We have a build up and 20 MA has touched the lows of the build up. This tells you that the market is ready to make a move. And then a couple of bonus tips, right? Price trading at all-time high is a good thing. And if the price leans against a higher time frame price structure, that is a good thing as well. So with that said, right, if you've enjoyed this training, right, and you want to learn more about price action trading, right, you can go down to my website, tradingwithrainer.com. This guide would be very suitable to what you've learned, strongly complement what you've just learned, right? The ultimate guide to price action trading. You'll learn how to better time your entries, exits, we talk about market structure, support resistance, and much more. So just click the orange button, right, and I'll send it to your email address for free. So with that said, right, I wish you good luck and good training, and talk to you soon.